Good morning, everyone, and welcome to the Ankerstar Wealth Morning Show. I'm your host, Allison Ankerstar, and today we'll be talking about inflation running hot, some tips about reading your tax form 1099-B, and the benefits of a Coverdell education savings account. But before we begin, as a reminder, this is a financial education presentation and should not be construed as personal financial advice. Full disclaimer information is available at ankerstarwealth.com. Good morning, Steve. This morning's inflation number shows that inflation is being a bit stickier than expected. What does this mean for the markets?
Yeah, well, good morning, Allison. Good morning, everyone. Happy Friday. Sure, this is not the number we needed this morning, and you can see how the markets are reacting, down over 1% across the board. Tech down almost 2%. Excuse me. So, what happened? Again, here's your hot inflation report article. So, we had some data points last week. Maybe it was earlier this week, actually. One of the two. So we started getting some stickier inflation numbers, and this kind of confirms it, unfortunately. So what does this really mean for the things that's driving the market right now is the Federal Reserve and how much are they going to raise rates? Because until they're done, we don't know where the bar is set to be able to readjust all the decisions out there, right? For, different investing things. So right now we have kind of priced in a 25 basis point rate hike coming up, excuse me, here in March, and another 25 basis points after that. This may start increasing the rhetoric that we might have to go back to 50 basis points. It'd be really bad. Or continue at the 25 basis point, but for longer than two meetings. So we don't really know how this is going to price in to the market yet, other than 2023 has been a year of gains so far, and this is going to obviously eat into more of those gains, or I think the Dow is actually going to be negative. We shall see how today plays out, but certainly an ugly number that is going to roil the markets, if you will, today. And then we're, in-house here, we're looking at re-looking at some of the model portfolios today to make some moves. So you will see some changes in your accounts, likely, if not today, Monday, to take a look at this. But overall, this will be a pretty significant headwind because it kind of confirms the thesis that we've kind of been operating on for the past couple of weeks.
Next, it's tax season. What are the common questions you get about the Form 1099-B?
Okay, so please ask your questions. I will not answer all of them here, but certainly the questions are rolling in, and I want you to ask. Yes, it's painful. Yes, it's hard to read these things unless you're a tax professional. But then again, I've got a tax professional that asked me a question in email this morning that shows that they didn't particularly understand what what the client's 1099-B was saying. So if a tax professional doesn't understand, then obviously it's pretty confusing out there. So just realize from your brokerage account, if you're with me, whether it's TD Ameritrade or Schwab or whoever you have on your own, E-Trade, Fidelity, Vanguard, anybody, at the end of the year, if you've bought and sold stocks, you're going to get a 1099-B. For the bigger brokerages, you're going to get a consolidated 1099-B, and a consolidated 1099-B is going to have all of your interest on it. It's going to have all of your dividends on it. It's going to have your Section 199 stuff. It's going to have, if you buy individual bonds, which I do for folks, there's going to be capital gains associated with the bonds, which are spread out over several years, which can be super confusing. If you simply import it into your TurboTax or H&R Block or whatever you use, everything will go in there and it'll be calculated correctly. If you go with a full-blown CPA, they're going to be very fluent in this stuff. If you're going with a tax preparer, they may need some help in these areas to make sure they account for everything correctly, right? But specifically, we're going to talk today about the 1099-B, which is the transaction log of the buy and sale of stocks, i.e. what we do predominantly for folks. So every time you buy a share of Apple and sell a share of Apple, it's recorded, or 100 shares or whatever it happens to be. It's recorded with the date and the price. And then when you sell it, that's when it becomes captured as a taxable event. So each line in your 1099-B is going to have here's when the stock was bought and the price here, and it's the total price, not the price per share, but here's, you bought 100 shares of Apple and it was $15,000. and then you sold it and you sold it for $14,000. So you lost $1,000, or you sold it for $16,000. Now say you gained $1,000. Well, nobody really cares. Yes, they care, but it's not important what the number of shares or the total amount of money in or out or whatever it is. It's the delta, right? Did you gain or did you gain money, or did you lose money? Obviously, if you make money in the stock market, you're going to pay taxes. But if you lose money, those are going to be capital losses that can also offset taxes, right? So just like you get penalized by the government for making money, you also get credit in years you lose money, which for most people, that was 2022. Now, here's what gets confusing. Whether your account is up or down, like how much money is in the account, has nothing to do with this tax form. The tax form captures the transactions, that occurred during that year. So if your account could be down, but if you've had Apple shares for 2 decades and you went to cash some point in time and you sold all your stuff, you're going to pay 20 years of capital gains on on your Apple holdings. So your account could be down and you could still owe a bunch of taxes because you went to cash in a taxable account. That can happen. Other things that can happen is if you're still in mutual funds, your account can be down, and mutual funds, since the account is down, they've had to sell shares of mutual funds, which means incur capital gains, and now you get hit for the capital gains. So your account could be down, and it showed that you actually made money this year, and you're like, what? My head's going to explode because the account is down. So separate the tax transactions from what's still in your account. Okay, so back to the transactions. What is it? Everything during a year. This information, if you're doing taxes by hand, good for you. This is one you'll transcribe all of the transactions on your 1099-B onto your Schedule D, which is the capital gains and losses schedule of your tax form. And there are short-term stuff, again, a year or less, less than a year, short-term capital gains. So in your 1099-B, there's a whole section of short-term stuff. And then there's your long-term capital gains. So when you get to the end, there's going to be a summary of short-term and a summary again of long-term. And if somebody asks you, I get asked this question every day. It's like, hey, what's my total, gains and losses for, a year? And it's just like, well, it's all right on your tax form. And they're like, well, yeah, just tell me anyway. So then I go in there and I have to add up, every little single piece of it, right? Because they're all taxed at different levels. And the tax form's not to tell you how much money you made or lost. The tax form's there to import information into the appropriate spot for your taxes. So that's why it's not telling you the information you maybe want. It's telling you the information you need, that sort of thing. Again, you'll automatically get this in the mail. Most of you have them unless you have a holding that is a little bit more complex, and then that can delay your 1099-B. I will say, if you have over a couple $100,000, you're doing anything other than just market stocks, then you might want to hold off on filing your tax return. Just don't get in a hurry, because sometimes these things get corrected, or you may not even have the form for a while just because one of the holdings was, needed more information or something. So don't be too big of a hurry. The higher you go on the net worth chain, the later you should be filing your taxes, right? Because there's just other stuff that comes in. Okay, how to file it. You file it through your tax form. So here's what a summary looks like. In the perfect world, this would be a one-page 1099-B. You've noticed that yours is probably, anywhere from 15 pages for a smaller account up to 40, 50 pages long for a larger account. So these are not small documents, even though it kind of presents it here as a one-pager. Again, you report interest and dividend gains on Schedule A and B, I think, respectively, but all of this that's on the exchange portion is a Schedule D. Let's see. And then they're all taxed at different. If you want to get super confused, go in and look at the tax schedules and the worksheets for each of the different flavor of long-term, short-term, Section 199, depreciation recapture. All of that stuff is very confusing in your taxes. So If you're still doing it on your own, you're basically at the mercy of making sure you put stuff in to TurboTax and H&R Block or whatever you use correctly. If you're using a CPA, you have no worries, but you're going to be paying more for that. If you use a baseline tax provider and you have a complex tax problem, you could be running into some issues where you might have outpaced their capability to handle, because they just don't see it a lot. It's not like they're trying to do bad. It's just they don't have a lot of expertise in this area. So anyhow, long answer to your question, 1099 Bravo. If you have questions, certainly reach out and our team here can answer them for you.
Last, what are advantages and disadvantages of Coverdell education savings?
Yeah, so we talked education the other day, it might have been yesterday, with the 529s and the super funding. A lot of folks are having kids lately, so we've been talking, what to do with like a 529 plan. Well, that's the most common for sure, and that's why we talk about the most often, is because most people, and that's what I did for Allison and her sister, is start 529 plans when they're born. Right. So if you have the luxury and you have extra cash, you can start a 529 plan at birth. Another option, which I considered and I went away from it, and I'll tell you why, is the Coverdell Education Savings Account. So what is it? It's basically a brokerage account where you can go in and actually buy and sell individual stocks, bonds, options, get as crazy as you want in a brokerage account, all with the same tax benefits as a 529, meaning you put money in, you grow it over time, and then as long as you use it for education or higher qualified uses of it, which are mostly education, but some tech schools, that sort of thing, then you don't pay taxes on all the gains, right? So it's a tax efficient account. You definitely want to do that versus just having money in the bank because of the special tax treatment. So again, you can go right into a brokerage account. It's a little different than the 529s. The 529s, you have to choose from funds, which is still, a good way to grow your money. But it's not as precise as going into, say, an individual stock or getting into options. There is an income limit, so make sure you don't bust those. 110 for single filers, 220 for joint. Here's the biggest downside, and here's why I didn't go into it, is in blue there, if you can see it, the max you can put in is $2,000 a year. We talked yesterday about a 529 plan. If you have two kids like I do, you could put, $17,000 a year is the gift tax exclusion for 2023. You can super fund it so you can bring 5 years forward. That's 85,000. You and your spouse can do it. That's 170,000. And then if you have two kids, you and your spouse can max it out. That'd be 340,000. Okay, that's a lot of money compared to 2,000, right? So you can put 2,000. Now that's per child, right? So make that a whopping 4,000. But if you've seen a college bill lately, 2,000 doesn't get you very far, or 4,000 or whatever, right? But this is a max per year per beneficiary. So grandma and grandpa can't put in 2,000, and your neighbors can't put in 2,000, and your favorite coaches can't put in it's 2,000 total for everybody. So that's the downside. But the upside is you can invest it however you want. So if you want to get super aggressive and you have the skill to be able to grow money over time being super aggressive, then you certainly can do it. However, they do boot you out of these things because of it at age 30. Then basically you need to use it and move on. Unlike a 529, where if you don't use it because you got a scholarship or you didn't go to college or you had more in your account than you actually needed, then you can simply wait till you have kids and then move that money onto your kids, right? So there's a lot more options with a 529. That's why I like them. But I do have folks with the Coverdell. It is fun because you can get in individual stocks and watch those grow. But again, the downside is that only 2,000 a year is all you can put in, and that's for 18 years, $36,000. That doesn't get you very far when it comes to college bills.
Thank you, everyone, for your questions. Please submit your questions as a comment through social media or directly to our email at vipservices@ankerstarwealth.com. And don't forget to like and subscribe to get daily updates. That's all we have for today's show. I'm Allison Ankerstar, and we'll see you back here tomorrow.